Today is Monday, January 9th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, the Senior Financial Economist at ADMIS, and Steve Freed, Vice President of Grain Research at ADMIS. Steve, let's start with the grain markets this morning. Soybean futures have backed off their highs. Why, and can prices continue to slip lower?
I think the main reason is that we don't really have a big South American weather problem like we did last year, and so some of the spec longs are liquidating some of those positions. We're also going into a report this Thursday in which the USDA could show record world stocks again, and despite good demand, just too much supply in the world. We're also seeing some kind of a rebalancing going on where money is from the index funds are moving out of long beans into long corn and long wheat.
You mentioned the USDA report this week. How important is this report, and do you expect any impact on prices?
Well, on one hand, I think it's a very big report. It gives us the final crops from last year, sizes. It also gives us D1 stocks, which in corn and soybean should be record high, and it gives us our first indication of U.S. winter wheat acres, and those acres could be down more than what the trade is looking for. On the other side of the coin, the conception is that the prices maybe have factored this report in. So we'll have to see if the machines trade the bearish numbers and maybe the bullish numbers in wheat, or if it's already factored in.
You also mentioned that we may be seeing a switch from soybeans into corn by some of the investment funds and managed money. Corn futures are near the upper end of their recent trading range. Why are we seeing this, and do you think that we can push even higher in the corn market?
Well, the farmers are not selling corn here in the United States, and we have record domestic demand. We also have a good export demand, and so I think there is some concern about in Brazil, some dry weather in the northern part that might extend into the second corn crop year like it did last year, and it's too wet in Argentina. So all those factors of causing a little bit of short covering by the traditional funds, and the index funds are coming in and buy it. I really don't think we can trade much over the level that we are now because the farmer has a record amount of corn to sell, and if we go any higher, he will let some of that corn go.
What about wheat? It seems we've traded above resistance in the wheat market. Can we go higher in the face of very good world supplies?
Well, it's almost like wheat now has a pulse in that we are seeing some cold conditions in the United States. We're seeing some dry conditions. We've got this acreage report, and there's a little bit of demand showing up on the export side because of some of the quality issues in the United States. So it's still too early to be concerned about the U.S. 2017 crop, but if this report shows lower acres than expected, you might see some more short covering.
Alan, let's talk gold for a minute. In light of the bearish influence of the rising U.S. dollar and expectations of tighter credit from the Federal Reserve, what is your outlook for the gold futures market presently?
Well, the gold market appears to be headed higher, and I think we've finally come to a tipping point where the bearish influences of a rising dollar and a tighter Fed are being outweighed by increasing prospects of inflation, including commodity inflation and wage inflation. So I have to remain bullish on the precious metals, gold and silver, and that it's going to be the inflation influence that propels the precious metals to higher prices.
And what would you say about the copper market then, Alan? I mean, copper following the economies of the world, how's that looking right now?
Well, actually, the copper market broke out well in advance of the precious metals to the upside. So we do believe that if we are correct in our thinking that the global economy is going to improve and improve more than the consensus view, that copper futures should be well bid. So we are looking for substantially higher prices for all of the industrial metals, probably especially the copper market.
Friday we saw new historical highs in the Nasdaq futures. What is the significance, if any, of the Nasdaq leading the way up for stock index futures?
Well, when the Nasdaq leads other indices, that is normally considered to be the bull spread. So in a long-term bull market, it's the more speculative issues that often lead, and those speculative issues are in the Nasdaq. So the fact that the Nasdaq has been the leader suggests that all of the indices are going to continue to advance. In fact, I would go a bit farther. I believe that we'll see new historical highs in all of the major indices, not just the Nasdaq.
Steve, let me jump back to you quickly. Can you comment briefly on the 2017 global weather?
It's going to be an interesting year because we don't have a strong influence either by La Nina or El Nino. So it's kind of a neutral Nino year. And so what the weather people are saying is they're not concerned about any global weather problems, no extremes as far as dryness or as far as heat is concerned. So, you know, good conditions across Europe, good conditions across the former Soviet Union, China. They're not really concerned about what's going on in Brazil and Argentina right now. And we should see rains returning to the Indonesia, Malaysian areas of the Southeast Asia, which should help production of palm oil rebound. The only thing they're trying to talk about is maybe a little late summer dryness here in the United States, but overall, it looks like a favorable crop growing season.
Back to you, Alan. Inflation. Late in 2015, inflation bottomed, paving the way for global price inflation to return, which it did in 2016. What is your outlook for inflation in 2017, and what are the market implications as a result?
Okay, well, we started to see inflation coming back last year in commodity prices, and now we are starting to see wage inflation coming back. In fact, it was just at last Friday's report that we saw a number indicating that hourly earnings increased at their fastest pace since 2009. So in 2017, I expect accelerating inflation on the commodity front and also on the wage front. That is, I believe, due to the global economy that is going to continue to expand and probably at above consensus levels. So that suggests higher prices for all of the major industrial commodities, higher interest rates. Stock index futures will probably continue to advance in this environment. So I think the outlook is very encouraging globally, and I think we can see some very important moves, very substantial moves, once again to the upside in the stock indices and also, as we mentioned, in the precious metals.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services or would like to open a trading account, please visit www.admis.com.